Hello, this is topic number 6 about thrift banks. We will be discussing the nature, kinds, capitalization, and operations of thrift banks. So to begin, let's discuss the nature of thrift banks. So we have here an article from investopedia.com. So a thrift bank, also called a thrift, is a type of financial institution that specializes in offering savings accounts and originating home mortgages for consumers. Thrift banks are also sometimes referred to as savings and loan associations, S&Ls. Thrift banks differ from larger commercial banks like Wells Fargo or Bank of America because they usually offer higher yields on savings accounts and provide limited lending services to businesses. Alright, so here in the Philippines, thrift banks, they also focus or they specialize in offering savings account, and then operation-wise, they're mostly on a provincial level, and then they also provide loans, but mostly to help small or micro businesses in the country. Okay. As for savings and loan associations, this is a separate kind of financial institution. We'll be discussing this the later part of the subject. But basically, it's a different type of financial institution, different type of service. It's a specialization as well. And then moving on. While a thrift's core offering are traditional savings accounts and home loan origination, these institutions also offer checking accounts, personal and car loans, and credit cards for consumers. However, they give primary attention to home financing or single-family residences. Thrifts are structured either as corporate entities that are owned by their shareholders, or they are mutually owned by their borrowers and depositors. Okay? But of course, here in the Philippines, we have the minimum required of capitalization for them. Later, we'll have them. Okay, key takeaways. A thrift bank, also called savings and loan association. Well, here in the Philippines, they can act as a savings and loan association. Basically, that's their main type of service, savings and loans. Okay, so it's a type of financial institution that specializes in offering savings and originating home mortgages for consumers. While a thrift's core offerings are traditional savings account and home loan origination, they also offer checking, personal and car loans, credit cards. In the years since the savings and loan crisis, which occurred between 1986 and 1995, many structural changes have been made to thrift banks that have blurred some of the distinctions between them and conventional banks. So I think from the word itself, thrift, they are targeting the smaller, and not really small, but they are targeting the provision of loans that are of smaller amounts compared to commercial and universal banks. Okay. Understanding thrift banks, the thrift institution began with the establishment of the consumer-owned building society in the UK at the beginning of the 18th century. Okay, so basically this is the history of thrift banks on a worldwide level. Okay, it didn't start in the Philippines, obviously. In the US, the first successor to the UK's consumer-owned building society were referred to as savings and loan associations. One of the main impetuses for the founding of S&Ls in the US was to make improvements to the market for mortgages in the US. Okay. At the beginning of the 20th century, the typical US mortgage was a 5 to 10-year interest-only loan that had to be refinanced or paid off with a large balloon payment at the end of the term. Homeowners often defaulted on these payments, especially as levels of unemployment rose during the Great Depression as levels of unemployment rose. Okay, so basically they focused on mortgages, residential maybe, or commercial, real estate. Okay, but then there was a problem during the Great Depression due to unemployment, so many people lost their jobs, so they were unable to pay off their loans. In 1932, President Herbert Hoover passed the President Home Loan Bank Act, an act that was aimed at encouraging home ownership by providing member banks with a source of low-cost funds for use in extending mortgage loans. This act was the first in a series of bills that sought to make home ownership a more achievable goal for more Americans in the first half of the 20th century. In addition, as a result of this act, the Federal Home Loan Bank Board was created. This board was tasked with facilitating the development of a secondary market for mortgages. It created S&Ls to issue those mortgages. Okay. So in the US, they had this Federal Home Loan Bank Act, which aims to help their citizens to become homeowners, okay, to have their own houses. And they were trying to do that by, financing through the banks, thrift banks, specifically. The impact of thrift banks. One of the major impacts of thrift banks, coupled with a mortgage insurance program created by the Veterans Administration in 1944, was the facilitation of home purchases in the aftermath of World War II. Many young war veterans and their families were able to purchase homes in the suburbs because of these federal programs. In the 1960s and 1970s, the majority of mortgages were issued through thrifts and S&Ls. As a result of these institutions and other federal programs, rates of home ownership in the U.S. rose significantly between 1940 and 1980. So in a way, there has been a positive effect. Many people were able to purchase their own homes, and then the negative effect is that the rate, it's not essentially a negative. Rates of home ownership, meaning a lot of people were able to own their own homes, okay, between 1940 and 1980. Okay, but this is a prelude to another depression that happened later on, because the 1998, there was a financial crisis back then, which is in a way related to real estate as well. That's another topic for the later time. By law, loans to commercial businesses can account for no more than 20% of thrift banks' business. So here in the Philippines, through the issuance of regulations by the BSP or the Monetary Board, so we also have a limit on how much a certain bank or thrift bank can offer as loans to businesses. During the savings and loan crisis, which occurred between 1986 and 1995, many thrift institutions and S&Ls failed. While analysts have come up with a number of explanations for the huge decline in the industry in general, the failure has been attributed to poor lending practices. It's possible that, they're not strict with the assessment of the borrowers. They haven't checked their financial history. Are they able to pay off the loans? Are they earning enough? Are their jobs, their pay from their jobs, can they can they ensure that they would be able to pay the amount due every amortization period? Alright. In the years since the crisis, many structural changes have been made to thrift banks that have blurred some of the distinctions between them and conventional banks. The Financial Institutions Reform, Recovery, and Enforcement Act of 1989 had a significant impact on the S&L and thrift industry. This was arising due to the crisis. Alright. In 2010, the Dodd-Frank Act eliminated some of the key advantages of thrift, such as less stringent regulations than were applied to major banks. The commitment of the thrifts to serving consumers continues, however. The most important purpose of S&Ls is still to make mortgage loans on residential property. Okay. So this is for S&Ls. Here in the Philippines, what do you call this? There are separate types of financial institutions. Okay. Later we'll be discussing them. Kinds of thrift banks from wallstreetmojo.com. So we have savings bank, private development bank, and then stock savings and loan associations. So savings bank, these types of banks generate funds from the sale of saving deposits to the customers and investing the same in offering mortgage loans. Okay. In private development banks, so these types of banks are formed for supporting government policies. Okay, maybe there's a particular government program supporting a particular sector or group of people or particular industry. So these private development banks would focus on those government priority programs. Stock savings and loan associations, it is a locally or privately managed financial banking institution that takes long-term deposits into use for providing amortized home loans. Okay, so they focus on they get deposits from their clients or depositors, and then they also provide loans mainly to be used for acquiring properties or residential houses. Examples of thrift banks, we have a list here. You can check the various banks are operating as thrifts. A few of them are mentioned below. We have Allied Savings Bank, City Savings Bank, Business and Consumers Bank, City State Savings Bank, Bank One Savings and Trust Corporation, Legazpi Savings Bank, Luzon Development Bank, Dumaguete City Development Bank, EIB Savings Bank, LBC Development Bank, Lemery Savings and Loan Bank, where else? What else? Cordillera Savings Bank, Sampaguita Savings Bank, GSIS Family Bank, Liberty Savings Bank, Video Elite Savings Bank, Inter-Asia Development Bank, Isla Bank, and then we have Life Savings Bank. Okay, next we have comparison between thrift bank and commercial bank. In the previous video, we've discussed commercial bank and universal banks. Okay, so thrift banks and commercial banks are totally different from one another, even though the former now offers similar line of services to that of commercial banking institutions and credit unions. Okay, so commercial banks are profit-oriented, that is, they operate mainly to earn profits, and these banks don't need to maintain asset class. Okay, distribution of their assets, let's say cash, PPE, receivables, investment. So there's no particular regulation there. They can operate in a way that they have a certain level of discretion on where to put their money or their asset. Okay, whereas thrift banks, they do have limitations. Okay, the shareholders mostly own commercial banking institutions, and as a result of this reason, these banks function with an objective to earn more and more. Before they are classified as commercial bank, we have capitalization requirements, right? For commercial banks, with more than 100 branches, it's how much again? 15 billion, I think, if I remember correctly. So this 15 billion, this is to be provided by the owners, okay, not from the depositors. So in a way, since they are privately owned, their bottom line or their ultimate goal is really to earn and profit, so that they can successfully maximize the wealth of their shareholders. The state and federal law determine the powers of commercial banks as regulated by BSP and the Monetary Board. Commercial banks operate under the FRS, Federal Reserve System, and such banking institutions procure deposit insurance from FDIC. Here in the Philippines, we have the BSP regulating the banks, and then we have the PDIC, Philippine Deposit Insurance Commission, okay, which provides member banks with some sort of insurance against the deposits of their clients. Thrift banks, we have this types of banking institutions that are way different from commercial banks when it comes to goals and objectives, and similar only in the case of offering products and services. Thrift banks are not profit-oriented, so in a way, they are thrift. It is mandatory for thrift banks to be a member of the FHLBS, Federal Home Loan Bank System. In the Philippines, they have a similar type of organization. It emphasizes more on assets that are related to housing. Unlike commercial banks, these offer loans at a lower interest rate and offer higher returns on savings to their customers. Basically, the earnings of thrift banks, majority of it still goes to their depositors. These banks are not profit-oriented, rather these are local people-oriented. That's why they mostly operate on a municipal or provincial level or regional level. These banks function with the purpose of assisting the local people with savings and loan facilities and ensure that the monopoly of the national and foreign banking institutions does not impact the economy. So as we currently have, although we have a lot of branches from commercial and universal banks, there are still certain municipalities that do not have these branches. So they do have thrift banks and rural banks that are operating in those smaller municipalities. Okay, I think I missed this one. It emphasizes more on assets that are related to housing, unlike commercial banks. These offer loans at a lower interest rate for their members, for the people in their community, and offer higher returns on savings to their customers. So yung mga depositors nila, they do earn a higher rate of savings compared to the depositors of commercial and universal banks. They are mutually owned. These are either owned by depositors or stockholders. With regards to capitalization, thrift banks, it's much lower than commercial and universal banks. And in a way, the deposits from the depositors is almost equal to the amount of money provided by private individuals or the owners of the bank. So they are mutually owned, essentially. Alright, so conclusion, thrift banks can also be called as a savings and mortgage loan association. These are often termed as a type of savings bank that offers specialized services in the real estate sector. It offers saving accounts facilities and home mortgage loan facilities to local people. These are mutually owned, as some of them are owned by the stockholders, while the others are held by their depositors, yung kanilang capital structure, so to speak. So you have equity from the owners, and then you have the deposits from the clients. These banks offer their customers a higher level of liquidity with respect to mortgage loans, and also provide a higher yield for savings account, as mentioned earlier. Thrifts initially offered facilities like time deposits and savings accounts. Still, with the expansion of banking services and the change in customers' expectations and requirements, these banks too started offering a similar line of products as compared to commercial banks and credit unions. Okay, they are allowed to do that naman by the BSP and the general banking law. Thrift banks function with the purpose of benefiting the local people, and for this reason it offers them high returns on their deposits and charges low interest on the borrowings or on the mortgage loans. These banks must not be confused with commercial banking institutions. The types are savings bank, private development bank, and stock savings and loan associations. Alright? So for the capitalization, we have the following. For thrift banks, head office in NCR. Kapag head office only, 500 million pesos. Up to 10 branches, 750 million. 11 to 100 branches, 1 billion. And then if more than 100 branches, 2 billion is the required capitalization. And then if their head office in all areas outside NCR, so head office only 200 million, up to 10 branches 300 million, 11 to 100 branches 400 million, and then if there are more than 100 branches 800 million. So it's essentially lower than the commercial and universal banks. In the commercial, the minimum is 2 billion, right? And then universal bank minimum is 3 billion already. So in a way, thrift banks, when it comes to capitalization, it's much easier to organize when it comes to capitalization. Okay, and then operations, again, this comes from the BSP website again. So these are the powers and scope of authorities of thrift banks. So in addition to the powers provided in other laws, a thrift bank may perform any or all of the following services. So we have grant loans, whether secured or unsecured, meaning the borrower could provide a mortgage or a collateral, or they can also not provide one, so long as they can provide other requirements such as certificate of employment or ITR or their business financial statements. Secondly, invest in readily marketable bonds and other debt securities, commercial papers and accounts receivable, drafts, bills of exchange, acceptances, or notes arising out of commercial transactions. So they can also put their money, their resources into investments. Issue domestic letters of credit for their customers who would transact with certain other businesses, or maybe businesses from other countries. Sorry, this is domestic letter. Extend credit facilities to private and government employees, so salary loan. Extend credit against the security of jewelry, precious stones, and articles of similar nature, subject to such rules and regulations as the Monetary Board may prescribe. So this sounds like pawn shop, right? Pawning. accept savings and time deposits, rediscount paper with the Land Bank of the Philippines, the Development Bank of the Philippines, and other government-owned or controlled corporations. Accept foreign currency deposits as provided under RA number 6426 as amended, foreign currency deposits. Act as correspondent for other financial institutions, purchase, hold, and convey real estate as specified under sections 51 and 52 of RA number 8791. Offer other banking services as provided in section 53 of RA number 8791. Buy and sell foreign exchange, okay, with prior approval of the Monetary Board and subject to the guidelines as may be established by it. Thrift banks may also perform the following services. Open, current, or checking accounts. But this is with prior approval of the Monetary Board. Engage in trust, quasi-banking functions, and money market operations. Act as collection agent for government entities, including but not limited to the Bureau of Internal Revenue, Social Security System, and the Bureau of Customs. And then act as an official depository of national agencies and of municipal, city, or provincial funds in the municipality, city, or province where the TB is located. Most of the time, if there is an existing GOCC bank in a municipality, so they are the official depository of national agencies. If a particular municipality does not have those GOCCs, then they would opt for thrift banks. Issue mortgage and chattel mortgage certificates, buy and sell them for its own account and for the account of others, or accept and receive them in payment or as amortization of its loan. Invest in the equity of allied undertakings, issue foreign letters of credit. So they have domestic ones and then they have foreign ones as well. But again, this is under the ones that should get prior approval from the Monetary Board. And then pay, accept, negotiate, import, export, draft bills of exchange. Alright, so those are the authority or scope of services that thrift banks may offer to the public. Okay, and then we have the list of top 10 thrift banks in the Philippines provided by BSP as of September 2017. This is an article from doingbusinessinthephilippines.com. Okay, so we have number 1, DPI Savings Bank, although currently there is a merger between DPI Savings Bank and BPI, which is a universal bank. Alright, and then second we have Philippine Savings Bank. Third, Rizal Commercial Banking Corporation Savings Bank, China Bank Savings, Philippine Business Bank, City Savings Bank, Philippine National Bank Savings Bank, Sterling Bank of Asia, Bank of Makati, United Coconut Planters Bank Savings Bank. Alright, essentially if you would notice, you have your commercial banks or universal banks, BPI, RCBC, but then they have what they call this, affiliates that are focusing on being thrift banks or savings banks. So you have your Philippine National Bank, pero merong kadugtong na savings bank. You have UCPB, pero again may kadugtong na savings bank, BPI, savings bank, China Bank, pero savings. The other one is corporate. Alright, so that's it for topic number 7. We had a discussion on thrift banks, although I'd like to show you the law as well. That's what do you call this? Covering the regulation of thrift banks. Okay, so this is the original Republic Act regulating the organization and operations of thrift banks. Okay, I'm sure there have been amendments or other supplementary laws or RAs, but this is the original. RA number 7906, Declaration of Policy and Definitions under Chapter 1. So the Act shall be known as Thrift Banks Act of 1995. Okay, it is hereby declared the policy of the state to first recognize the indispensable role of the private sector, to encourage private enterprise, and to provide incentives to the needed investments. And then secondly, promote economic development pursuant to the socio-economic program of the government, to expand industrial and agricultural growth, to encourage the establishment of more private thrift banks in order to meet the needs for capital, personal and investment credit, or medium and long-term loans for Filipino entrepreneurs. Thirdly, encourage and assist the establishment of thrift bank system, which will promote agriculture and industry, and at the same time place within easy reach of the people the medium and long-term credit facilities at reasonable cost. Fourth, encourage industry frugality and accumulation of savings among the public and the members and stockholders of thrift banks. And lastly, regulate and supervise the activities of thrift banks in order to place their operations on a sound, stable, and efficient basis and to curtail or prevent acts or practices which are prejudicial to the public interest. Okay, the main point of regulating. Okay, then section 3, definition of terms for thrift banks include savings and mortgage banks, private development banks, and stock savings and loan associations. Okay, pretty much the same as what we discussed earlier. Accumulating the savings of depositors and investing them together with capital loans secured by bonds, mortgages, and real estate, and insured improvements thereon, chattel mortgage, bonds, and other forms of security, or in loans for personal or household finance. Okay, whether secured or unsecured, or in financing for home building and home development, as we also discussed earlier. In readily marketable and debt securities, in commercial papers and accounts receivables, drafts, bills of exchange, acceptances, or notes arising out of commercial transactions, and in such other investments and loans which the Monetary Board may determine as necessary in the furtherance of national economic objectives. So what we discussed as part of their allowed scope and scope of authority for their operations. So yan, providing short-term working capital, medium and long-term financing to businesses engaged in agriculture, services, industry, and housing. Provision of diversified financial and allied services for its chosen market and constituencies, especially for small and medium enterprises and individuals. Monetary Board by BSP, and then we have Chapter 2 about their organization. Shall be in the form of stock corporation. Monetary Board shall fix the minimum paid-up capital. We've had this earlier. Establishment of thrift banks, they would follow the establishment of a corporation. Okay, so they would need to register with the SEC and then submit such certificates to BSP, apply for bank classification. Okay, bylaws, amendments, bank management, board of directors or officers. And then we have Chapter 3, ownership and capital requirements. So for ownership, at least 40% of the voting stock shall be owned by citizens of the Philippines, except where a new bank may be established as a result of merger or consolidation. Thereafter, other information, you can read this. Okay, combined capital accounts of thrift banks. Alright, so we have that. Chapter 4, we have the powers of thrift banks. These are the financial services that they can offer to the public. Okay, we've discussed this earlier. Limitations on lending authority, except as the Monetary Board may otherwise prescribe. Okay, the direct indebtedness of thrift banks of any person, company, corporation, or firm, including the indebtedness of members of a partnership or association for money borrowed, excluding loans secured by obligations of the BSP, loans fully guaranteed by the government as to the payment of principal and interest, loans to the extent covered by the holdout on or assignment of deposits maintained in the lending bank and held in the Philippines, other loans or credits as the Monetary Board may, from time to time, specify as non-risk assets, which shall in no time exceed 15% of unimpaired capital and surplus of the bank. Alright. Okay, so there are more information here about the limits. Investment in allied undertakings. Okay, so the limit on how much they can invest in particular types of investments. And then they have here, investment in allied shall include institutions engaged in the following activities. Okay. In in accordance with their reason for existence. Chapter 5, we have the supervision by the Monetary Board and by the BSP. Chapter 6, incentives, reserve requirement differential, liberalized branching rules, notices of state of condition. Chapter 7, we have exemptions, stock exemptions. So we have this exemption from publication requirement. And then we have exemption from notarial charges. I'm pretty sure there have been amendments to this certain provisions. Okay, this has been done back in 1995, so it's already 2021. There are certain amendments done to this. Prohibited acts. Okay, this would fall under the regulation already. Okay, and then we have general provisions, minors as depositors, return of deposits, deposit insurance, annual fees, implementation, annual report, parity clause under same circumstances, separability, repealing clause, applicability of errors, and effectivity. Alright, so this is it for this video about thrift banks. The next one would be about rural banks. So that's it. Thanks and bye.